Hello everyone, my name is Gregory Schnazy and let's talk about Bitcoin Borrowed DAI. As always, these videos are for educational and entertainment purposes only. They are not tax or financial advice. Bitcoin Borrowed DAI is powered by Bitstack. Track your wealth and portfolio in Bitcoin terms. Visit us at trybitstack.com and start your trial today. So today we're going to get technical and I want to share and show you my favorite chart in Bitcoin, which is the 10-minute heartbeat chart. Basically, this chart shows average time between blocks since the Genesis block all the way to today. So on the left-hand side, we have a linear chart. So at the beginning of Bitcoin, the network was very small, the hash rate was low, block times fluctuated quite a bit, but in the protocol, Bitcoin wants to have a block every 10 minutes on average. So you can see after a little bit of a hectic period in the first year, it has really stabilized around 10 minutes since 2010, basically, and it's pretty much just a flat line all the way across, which is just Bitcoin working every 10 minutes to produce a block. Tick tock, next block. Doesn't really matter what's happening. We're always getting a block basically every 10 minutes. And then on the right side here, we're showing the same chart, but in log terms. It's the same story. You just see it a little bit differently here, where again, the first year network is very small, block times are a little bit sporadic, but as things pick up and the network grows, it just sits at this 10-minute interval over time. I mean, it goes up and down a little bit, but it's pretty much just flat, which is incredible just to have such precision, such consistency over time. And what's really interesting about this is that Bitcoin has been able to maintain this average time between block with great accuracy and great consistency, and the network has been anything but that. Hash rate over time has just exploded. And so here we see hash rate for the network over time, and it is just like basically straight up and to the right. Miners have joined the network over the years from all over the world, all sorts of energy sources. Mining has gotten better over time, from mining on a CPU to a GPU to an ASIC chip. It's just amazing how much energy, how many data centers have been built, how much effort and proof of work goes into Bitcoin mining, which is this blue chart or blue line here. Yet we still have our 10-minute interval time, the bottom line, just chugging along being flat. So with such great growth and change in the network, we still see Bitcoin just producing a block once every 10 minutes. So then how does mining work? A very short version is you can think of mining as miners trying to solve a puzzle or entering into a lottery. So every 10 minutes, there's a lottery. Every hash you do or a miner does is like an entry into that lottery. And then you're basically seeing if you pick the right number for each hash. It's like, pick a number, see if it's the right one. Nope. Okay, pick another number, see if it's the right one. No. And you just keep doing this until eventually you find a yes, and you pick the right number, which allows you to add the next block to the blockchain, and you get the subsidy, the Bitcoin reward, plus all the fees for the transactions that you put into it, and then you propagate it to the network, and that's how it gets added to the next, or to the blockchain. There's a little bit more to it than that, but you can just kind of think about it as every hash is an entry into the lottery. But you can see the hash rate explode here. So if more and more people are guessing at a higher rate, shouldn't they be winning the lottery? at a faster rate, but we don't see them winning it. It stays at 10 minutes per block, which is really incredible. And we'll get into that in a moment. Which is really Satoshi's genius here, where as more people mine, as more people guess the Bitcoin lottery, it gets harder to win over time. So if you have very few miners, like, 2015, 2018, like this period where its hash rate is relatively flat, the blocks are still coming out at 10 minutes or one block per 10 minutes. So the amount of guesses or hashes to win the block, to figure it out, is relatively small. But as more and more people and more hash power comes online, it gets harder. So it gets more difficult. It's called the difficulty adjustment. So just as we see miners and hash rate just kind of go up and to the right over time, we see Bitcoin getting more difficult to mine, to guess. The lottery is harder. It takes more effort. It takes more proof of work to be able to add that next block to the blockchain, because the protocol wants a new block every 10 minutes on average, which is amazing. So if you think about it, what this really means is that Bitcoin issuance is not responsive to demand, in the sense that it doesn't matter if there's more demand, hash rate, there's more guessing, or less, Bitcoin will be released at a 10-minute interval, regardless of price, regardless of hash rate. So we can't say the same thing for gold or silver or things like that, where if the price of gold or silver, 10x or 100x from here, you'll melt down your gold fillings in your teeth. You would melt down your fine china. You would more gold and silver come to the market because the price is so high and it's economically feasible to do that. At some point, it makes sense just to go to the river and start panning for gold if the price is high enough, right? But which is an extreme example. But for Bitcoin, it doesn't matter the price or how much hash rate comes on or how much hash rate comes off. The network adjusts here through this difficulty adjustment, which is just really amazing. So the protocol wants a block every 10 minutes, and it will change itself. It will change the difficulty to make sure that happens. So kind of putting this all together just in one screen here. Again, so we have our average time between Bitcoin block is 10 minutes. That's the blue line on the bottom. It just stays constant. It stays flat in a world that is changing rapidly, that the network changes, the hash rate changes, right? Like here's the hash rate. It's pretty much just going up and to the right. It's come down a little bit over time here. But this is rapid change, yet the blocks still come out one every 10 minutes on average. And that's because you see the difficulty adjustment over here basically mimicking or following the hash rate, where the hash rate comes up to the right over here. We see the same thing for the difficulty. And then even as the hash rate has come down a little bit, so has the difficulty. Again, that's because Bitcoin wants a block every 10 minutes, regardless of hash rate, regardless of price. So because of this, we know that we're going to get a block roughly every 10 minutes, and we know how much Bitcoin will be issued per block given the halving cycle. This sets Bitcoin's monetary policy so that we know that the last Bitcoin is going to be mined in like the year 2100. And we can plot this out and see this with great certainty. So that gets us into the halving cycle and how do the Bitcoin subsidies work, which we'll get to in 1 second. And again, so this just really gives us our hard-coded scarcity, where in our current block or our current halving cycle, for each Bitcoin block that is mined, there's about 3 Bitcoin as the reward plus all the fees. And then in 2028, it'll get cut in half. And then 4 years after that, it gets cut in half. And then so on and so forth. Till the year 2140, we will mine the last Satoshi. There'll be no more Bitcoin issued into the network, and there'll be no more subsidies. So everything will be through fees. So how can we know this? So we know that Bitcoin tries to have a block every 10 minutes. How does this halving function decree get issued by the protocol? So that's where we have this halving cycle. And this is from the Bitcoin code base, and I just kind of want to walk you through what this means. So every time somebody needs to check for the block subsidy, they call this function get block subsidy. They pass in the height of the block and then the consensus parameters. And for us, it's really the 210,000 blocks for this halving interval, which is about 2-week period. So we want to know how many halvings there have been so far. So we take our block height divided by the halving interval time, and this will return us a value. So if the value is greater than 64, we're going to return 0. So that is this period over here, where when we call this function, we'll get a value of 0 from here going forward into the future, which means no more subsidy, return 0. There are no new Bitcoin coming into the market. So that's how we can be so sure that there's 64 halving periods, and each one is about a 4-year period. I think I misspoke. I said two weeks before. It's about a 4-year period. It's over 210,000 blocks. And we're just going to have 64 halvings, and that's it. It's hard-coded in, as you can just see here on line 5. It's that simple. And then if the halvings are less than 64, if we're still in the period where there is a subsidy and we want to release more Bitcoin into the network, then we come down here and basically just start with 50. So the first halving cycle, when the network first started, for every block that was created, the subsidy was 50 Bitcoin. And then we take the subsidy and divide it by the halvings. So we basically just cut that 50 in half exactly as many times as we counted earlier. So however many halving periods there have been, cut the 50 in half, and then that gives you the subsidy that is available for the current halving cycle you're in, and then that's what we return. So to take this function and go back a few slides, so when we call it now in 2024, 2026, from the 2024 halving cycle, we would get 3.125. Return subsidy, this is a 3.125. 2028 and going forward, it'd be 1.5625. 2032, again, it's not exactly 4 years. It's every 210,000 blocks, but it's about 4 years because we know that Bitcoin come out at 10 minutes per average. Then we would return 0.78, and so on and so forth until we get to that 64, where once it's 64 or greater, we return 0. So anyways, to summarize all of this, this is how Bitcoin enforces its supply schedule and its cap of 21 million. It's looking at where we are in the halving period, because there's only going to be 64 of them. If we're at 64 or less, then return a subsidy. And that subsidy gets cut in half every period. And we want a block every 10 minutes. So the difficulty adjustment adjusts to take care of that. So these two principles coming together give us blocks every 10 minutes and 21 million Bitcoin hard cap, which is just totally incredible to have it on a decentralized protocol like this. And the halving cycle here is the periods are, it's 12 lines of code. It's quite amazing. Anyway, that's my favorite chart in Bitcoin that I just wanted to share today. And then this is rocket fuel for Bitcoin Borrow Die. It's predictable scarcity. It's predictable issuance. Every 4 years the reward is getting cut in half. There's fewer new Bitcoins for people in the market, and as fewer Bitcoins enter the market, the demand, as there is demand, they've got to come from somewhere. So sellers and buyers reach a certain price, and if you start to run out of sellers, the price goes up. If you get more sellers, then the price can go down. But because there's fewer Bitcoin coming into the market, as longtime holders buy and hold, this is the whole thing with Bitcoin Borrow Die, is that you can just hold it basically forever and take out loans and roll your asset that way. You never have to sell. Therefore, there's just fewer and fewer sellers in the market, which continue to help push the price up. And there's just unmatched certainty. Walking through all this, you can see that we get Bitcoin every 10 minutes. There's 64 halving periods. There's a 21 million hard cap because of that, and it is not changing. So that's my favorite chart in Bitcoin. Visit us at bitcoinborrowdie.com or try bitstack.com. Leave a comment. Let me know what you think, and I will see you next week.